Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, December 21st, 2022. I'll do a brief overview, mainly focus on the equity markets. This is NQ. Before I get there, let me just do an update since I did not get back to my desk before the close yesterday. I told you I had to leave town for an appointment. This is that. No, this is the ZB trade I threw out the other day. Let me just give you that real quick update because we pretty much hit the target that I gave you there, the max target on that. Correction, I meant the minimum target. This is that trade idea the other day thrown out on the 16th, and it was a minimum target I gave you of 128.075, showing those arrows going down there. And I just checked, paused the video right before I queued that up, and this happens on this program sometimes. The lines just go away. They decide to disappear. This is what it looked like here, and there's that level right. I think I had it right here. And so again, the minimum target's been hit, and on a minimum target, you're probably going to get a reaction. That's what we've had so far. So if you took it, well, where did I throw it out at? It was right here, somewhere in there. We had just broken down. Pretty good trade again. For where we're at. Remember, we're at the end of the year. You're going to see some back and forth. A year-end position squaring, tax loss selling, everything else, and active traders might want to just opt to, get these quick hit and run trades. That was a drop of 3%. Yep, right about 2.5%. Again, if you trade Treasury bonds, that's a big, good move for a quick trade because they're inherently low volatility. Therefore, they're, the futures by nature are leveraged, and then of course, traders will. You trade many times what you put into NQ or QQQ. You trade many times that on treasuries because you're trying to get smaller moves, just like Forex traders are trying to get very, relatively small moves relative to the stock market in the dollar and euro and yen. Same thing with treasuries. So, anywho, that's that. And I did, and I'll add the lines back to this. There they all are. And, so if you're holding out for more, no problem, but we may bounce. I'm going to show you something on the 15-minute chart real quick. And there it is on the Treasury bonds TLT. 104.72 was that first swing target there. Let's see. 104.72, and that was it. So we undercut that, and we're between there. You could add some levels. Again, I had a lot more. This is a daily chart. On that, I gave you the 60-minute chart of ZB, the futures, and there were other what I call micro levels or smaller levels. That'd be one of them right there. So I think we'll continue to work our way down. We have a bearish PPO crossover, but we may get a little kickback here. Let me show you what the ZB looks like on the 15-minute chart. Step it down. That was, by the way, a 120-minute chart, 2-hour candles, 6 months of price history. And if we go all the way down here to a 3-week 15-minute chart, you can see this is what we're looking at here on CB if you're trading it. That was the divergent high we came off of. That was part of the reason, among others, to short it. And so now you have this downtrend line right here with a reaction today. You have what I consider the minimum 3 clean, distinct reactions there, 1, 2, 3. You put in a divergent low when we hit that minimum target yesterday. It gave us this little bounce here, and now we're kind of between a rock and a hard place. You have this very, very minor but valid enough short-term uptrend line. And then you have this downtrend line. So if we pop that downtrend line, and I suspect we might come up here, and that would take us to 129.093 if you're looking to maybe game a quick counter trend bounce or get back into a short for the next leg down, something like that. All right, enough on that. Let's go back to the markets, do a quick update there. This was one thrown out yesterday. Earlier in the week, or was it late last week, we were right about here, and you had a positive divergence, and I said I would really like to see NQ get down here I started highlighting it here with positive divergence, and I said you don't always get what you want, but that'd be a more optimal entry. And then yesterday morning, that's where I highlighted that's we had hit that level. So this is NQ 60-minute chart, hourly candlesticks. There's the uptrend line, plus you have price support. Really doesn't get much better than that. And as I mentioned, very oversold. The market, since we got rejected at the 200 days a couple weeks ago, those golden shorting ops that we had, were quite oversold. And at the end of the year, you usually don't get any kind of meltdown or anything like that. You're going to get, anytime you're that oversold on the 60-minute chart, you're going to get dip buyers stepping in. I'm going to show you some other things too that are, giving me pause. I wanted to clarify. There were some comments on the post I made today. Yes, that was a typo. I remain longer term bearish, near term bullish. Just looking for these bounces. I fully expect a reaction here. Let me zoom in a little bit. If and when we get to T1, we're getting close now. T1's about 11,409. So this should play out something along these lines. Get a little reaction there. Tradable pullback. I don't know how far, but if we go all the way down to R1, that's why I gave you that level today. Then we were right there when I gave it to you, and there was a nice objective add-on or long entry when it popped. You can see the impulsive move up through there. Here, no, now you can see it if you couldn't see it in the video before. And so this is what you look for, and shorter term time frames you look for on the heels of a divergent low and a reversal off support. You get this like consolidation. You can see they were bouncing up above that 11,263 ish level, popped it with an impulsive green candle. So at this point, whether we get to 11,409 first or not, any back test of that level would certainly provide an objective long entry, as would at this point you can draw an uptrend line off the lows, and I'm going to do that. And so that would be, there's these would be objective long entries or add-ons if you're an active trader, and that would be again pull back to the 11,263 40ish level, and or the uptrend line just below it. And then of course you can keep tight stops if you want. You can keep stops below the recent lows and that trend line. It all depends what you're going for. So anywho, that's what we're looking at here, something along these lines. And big level, even if you're trading NQ, watch that QQQ 280 level. Remember that this is a daily chart here. That's that recent trading range. The bottom of it very well defined. Lots of reactions on it, and it's almost like a magnet. If we get there, you'll likely see some sellers step in. Let me show you a few things that just give me pause on how quick we're going to go down to those next downside targets on the weekly. In other words, undercut the lows and have the next major leg down. I'm just going to look at the top components here. And of all of them, if there's any one single stock out there that will ever give me pause on whether I'm long or bearish, or long and bullish, or short and bearish, if this one is telling me something different, you got to stop and take a check here, because this is the largest component of both the NASDAQ 100 and S&P 500. It's so obviously it has a mathematical weighting, the biggest mathematical weighting in all the indexes, but it's also the big psychological stock for the market, and that's Apple, of course. And so what I'm going to point out to you here is the last time on the daily time frame we had positive divergence is all the way back here. You can see that indicators making higher lows, prices making lower lows. It was a divergent low. It was right around this 128-ish support level, and from there we had a rally, or Apple did, of 36%. And it had a beautiful, nice, clean up trend line, and that's where we shorted and got out of that. And I wasn't in Apple in particular, but shorting the indexes. And so anyways, I wanted to point that out. This is it. So you can see there's our divergence, positive divergence. Indicators certainly making higher lows so far at this point. There's the RSI, PPO, and we reversed about where we did last time. That level was closer to 128 right there. You can see a lot of lines here. You had the downtrend line, that's a big one. You have the 200 days, and that's where we, had the most recent short for the indexes. There was that big drop, but again, very oversold. People, bulls and longs are like, Pavlov's dogs. When bell rings, they salivate, they buy dips on, and Apple's still, relatively holding up compared to most of the other big FANG stocks. So I have to point that out. Now, and remember, positive divergence on the daily can lead to much more than just a quick bounce. So we're going to monitor this. What will I hate it. I hate when I see wishy-washy analysis, or hear it, or even have to give it. But I would be remiss to ignore this. So I'm throwing it out, and what this could mean is if it plays out, well, what you want to look for is, does Apple take out this downtrend line? That's a pretty significant trend line. If you look at it this way, you have a little wedge there, maybe work its way up, form that bullish falling wedge, but a break above the trend line, and then you have the 200 days here. Well, that's going to be nothing but bullish for the stock market and nothing but bullish for Apple. Now, we're not there yet, so you can see I have a lot of lines. And remember, in a bear market, sometimes these divergences don't play out, or they play out for a much smaller move. But again, it's something worth watching, especially as we head into the end of the year. And just remember, swing and trend traders, I told you it's usually a tough grind up until at least to the holiday, till New Year's is over and we kick off the trading year. So what the line right here I just drew gives you this, a pretty clean up trend line with some numerous reactions on it so far, and we're back testing there. So, and you also have pretty good price resistance right here with former support. So in a perfect world, especially, or a perfect world for the longer term bear scenario, or the swing shorts, trend shorts we have, this is where I'd like to see Apple rejected, and that's going to coincide roughly, see that yellow line here, it's at 138.36. It's not a hard level anymore. It's been traded through so many times, but it's more of a resistance zone. This is where ideally Apple should turn down, and then ideally take out the lows here. If it can take out that positive divergence by making a lower low, taking out these previous lows in the indicators, then that's all good for the bearish case that we may see in the first quarter this year. That quick final swoon down, hit those next targets on the indexes, and then turn around and go long, cover our swing shorts. Otherwise, we watch it. If Apple comes up on through here and hits that trend line, I'm be watching QQQ as well. Is QQQ going to take back 280? That's a comparable level. There's the first trend line. There's a second one there. So as of now, it's near term. I remain near term bullish. I think we're going to go up to at least that level, and then we'll kind of play it by ear. That's all we can do. And we're heading into Christmas now. Today's the 21st. I believe the holiday falls on Monday this year, so we're going to trade through this week. I'll be around as much as I want to be around. I don't mean to say it the wrong way. I'm not going to force trades. I'm going to give you updates when I see them and tell you what I'm doing or what opportunities I see. But again, it's always a good time to take some time off between now and the first of the year, or just keep things light, or do what I do. I'm in and out, and I've talked about this for years. I use OCO trades. One cancels the other. It is the best thing, in my opinion, since sliced bread when it comes to trading. OCO, one cancels the other. What does that mean? You take a trade like the NQ trade. If you're here, you have there's that 60-minute chart right here. There was the breakout. There was those levels I gave you. This was so let's just say, for example, you woke up today and you're like, okay, you know what? I didn't take this one the other day, but I'm going to take it on this pop, and I'm going to use this uptrend line. I'm going to have a stop somewhat below there. So there's your stop loss order, and you're just gonna, you don't want to have to micromanage trade. You're going to try to swing it all the way up here, and so you have a sell limit order right there, a little bit below the max target. Also, again, align that with 280 on QQQ. You want to sell a little bit below 280 if we get there. And then there's your stop loss order, and the way it works is whichever is hit first, it cancels the other. If you don't use an OCO and you have a sell limit and a stop loss, well, you go down below, you might sell you out there, or it might stop you out here, and then you don't have a position anymore. But then if it rallies up here and you're not paying attention, that's a good to cancel order. It's going to fill it in short, sell shares. If you don't have them, I don't know who you trade with. If you trade with Interactive Brokers, in order to sell, If you have 100 shares of XYZ and you put a sell order, it's going to sell it there. If you don't have a position, you have a sell limit order up there, it's going to sell it anyways. In other words, it'll sell you short. That's what an OCO order will cancel out the other ones. Okay, let's keep it relatively quick. Let me just show you a few other market-leading big FAANG stocks. So there is Apple again, positive divergence, moving up today on that divergent low. Still not what I call, and this is again just in my book, confirmed divergence, because you need to make a bullish crossover on the PPO with that orange line crossing the white line above that one, and then you have what I call confirmed divergence. So it's still potential divergence, but that's where it all begins before you get the crossover. So worth noting. And let me just show you a few others. Microsoft. All right, so Microsoft, pretty decent support right here, and you can see that's at I have it at 238.86, give or take, and so there's a level to watch as well. So far it's holding up that level and reversing off it, but there's a couple of Amazon. Okay, if Apple doesn't give you pause, I think Apple and Amazon together should. Again, so it's telling you what I see and how these things may play out, and if they do, this is pretty strong positive divergence. And we're looking down below on the indicators. I'll draw it out for you. You have prices making lower lows, right, at big support, mind you. That also is a big factor, big variable. Random divergence sometimes plays out, but when you have a stock at pretty key support with positive divergence, and you can see that support on the weekly chart too, by the way, it's huge support on Amazon. This is, I have to say, of all the FAANGs, this would be my favorite right now. If you're looking for something, you think we're going to rally into the first quarter, and again, this is going to give me pause on swing shorts. That's a major level, and I may even take some of this just to hedge up if I remain, hold tight with my swing shorts. That's massive support. Look at that. Look at all these levels back here, all these reactions. I mean, back at that point. And I pointed this out, a long time ago. I pointed it out back here. I even pointed out to you when we came close the other day, a few weeks back. This is a weekly chart. I said, look, any rally back up to here, which we hit, that was my target here. I highlighted Amazon as one of my favorites back then, on several occasions, at every pullback to that level, 103.31. It was a long-term swing short target from all the way up here, and we did. We had a nice bounce. We had two nice bounces. We gamed to both. Got out of that one there, and then recycled in back there, and then again hit the 200 days. It was a beautiful short. But now look, we came very close, and I said, close, but really not close enough. I still favored a move down, and we got it. We rallied back, hit the 231 resistance, and now we got it. For all intents and purposes, that's close enough to 83.35 to consider it effectively hit. So now you have positive divergence on the weekly and daily. And I know some, you might not want to hear it if you're, short, bearish. I wish I didn't see it. If I didn't see this, I'd probably be much more aggressive short, or wouldn't. I'll play it by ear. I'll tell you if I decide to just close things out before the new year. But again, that's a nice looking setup for Amazon. I just have to say right there. Now, we're in a bear market, so if we break it, and all of a sudden these indicators start going down, you take it out, and you no longer have divergence, just like Apple, that's very, very bearish. And it's like, get the hell out of Dodge. With your longs, it means you're going to probably have a big swoon down, because fewer things are more bearish than a beautiful technical setup that fails, a bullish setup that fails to materialize, especially in one of the market leading stocks like this. So there's Amazon. A lot of bulls chomping at the bit and drooling. I don't blame them, to buy Amazon 55% lower from where it was a year ago. So anyways, that's that. I don't want to beat a dead horse, but I do want to point out that is a pretty compelling case right there to go long, and give me a little pause on the swing shorts right now. Alphabet, nothing crazy. You had a almost divergent. Well, yeah, you did. You had a divergent low right there. I have it drawn out. Positive divergence, started to rally. It's kind of in no man's land, in my opinion, between support and resistance, so I don't have a big opinion. The strongest looking charts right now, or potentially strongest, are Apple and Amazon. There's Tesla. Tesla, fell off a cliff when it dropped below. That's big. That's big support. And I know it. Everyone's, the media chalks it up to Musk's selling to fund his, Twitter issues. But either way, it was a big technical level. So that's bearish for Tesla. But look at that. I've had this line here for a while. So there's also Tesla at support. That's the primary uptrend line off the 2019 lows. And so there's another one. Let's see on the daily. Oh, and yeah, you also have that positive divergence. So yeah, that's it, guys. So what I'm pointing out here are some things that are giving me a little pause. Things I'll continue to monitor, and things that may affect. If these market leaders, if these divergences play out, that would most likely mean rally into year end, into or shortly after year end, into the new year. And so we'll continue to watch this. And Tesla's just barely hanging on that divergence by the skin of its teeth. You can see that. In other words, if it goes much lower, then you were going to take it out. This is almost flat line divergence. You have about equal lows in the PPO and RSI against lower lows in prices. That's still positive divergence, but go much lower, you're not going to have it anymore. So that's it. My goal wasn't to go through each and every one. There's still plenty of bearish stuff in the charts, like the semis, including the big dog, NVIDIA now. Clean uptrend line, negative divergence, rally right into resistance, the downtrend line, just like the indexes did, with negative divergence, and then a breakdown. So there's something for everybody, bulls and bears alike. And so, continue if you're an active trader. Just hit and run these little quick opportunities throughout wheat today. It's time. I'm looking across the board. Energy. I threw out a natural gas the other day. I told you, wasn't as crazy this time around as the last time right here, but it's certainly worth mentioning and certainly worth taking a long shot at along. You could, again, it's all about RR, risk reward. If you put a stop not too far below the recent lows, you have minimal downside compared to the upside potential. If this trend line holds, we are in a bull market in commodities and a bull market in energy, and it's been a heck of a correction. And so you take a shot or don't. If you don't believe in it, if you take a shot, don't let it get too far away from you. If that trend line breaks, that's going to be bearish. Oh yeah. So yeah, I mentioned commodities. I didn't want to go off too much on the tangent, but there's wheat. Big divergent low. Still, as I mentioned, these things are in a wheat. Like most commodities, to me, this is clearly early stage bull market action. Commodities trade got a little ahead of itself, and had a correction, and we may be looking at the next leg up. And it's not just energy; it's not just wheat starting to look good. Corn, sugar's been doing well lately. There's soybeans right there, not too far off highs. These guys are in a bull market, and there's, again, they had a hell of a run. We had a little abatement, and that gave the stock market its rally. Everybody started cheering up and down. Powell did it. The Fed did it. The inflation bull is dead. That's hogwash. I told you this whole thing. I think we're going to be in a period for years to come where you're going to have these abatements in inflationary pressures. The market's going to get all giddy. Fed may back off, and market will rally, and then the next leg up is going to come and remind everyone that we're in a new era of inflation. It is here to stay, and so anyway, so commodities, gold, silver, things like that should be good long-term investments, and the stock market's probably going to continue to come under pressure for a while to come. There's coffee. Where I'm trying to find sugar for you. Where is it? There's two ETNs out there, Kane and SSG. So you can see you had this bullish wedge right here, almost a descending triangle pattern breakout, moving higher. Got a little bit of divergence right now. Not sure if I'd be chasing that one, but it just shows the overall picture. This is just consolidation. We had a hell of a run. It's been consolidating and will most likely break to the upside. SGG right here, that one has, remember they're two different companies and both tracking sugar prices. This one's recently broken out. and then I'd have to go to sugar futures. I don't know if I have those queued up. I have a new PC. I just set up a lot of new charts. Um, No, I don't have it up, so I'm going to wrap the video here. And in configuring this new PC, I went into interactive. For those of you that use interactive brokers, I found something that's kind of useful. In the settings, when you go to the configuration, little gear icon on the upper right hand corner, I use the Trader Workstation Classic, but this if you use the Mosaic or the newer one, it'll work as well. Go into settings, and then they all pop up. The global configurations, go to Sound Manager. The default are those little chimes ding, whether you have an order filled, a partial order filled, your data connection goes offline, it's the same little chime. You can change all the sounds to voice, and it has like a British guy's voiceover. It'll tell you order partially filled, order completely filled, data connection lost, anything else. There's all the different little chimes you get. It'll tell you what's happening. I find that pretty cool feature for those who use Trader Workstation. All right, I'm going to wrap it up here, and I do have to run out here shortly, but not long. Got to run up the street. Oh, also have a conference call with the insurance adjuster here at 12 o'clock, so and then I got to run out. All right, so I will pick things up later today. I'll be back at my desk within a couple hours. This has been Randy Finney with Right Side of the Chart. Have a great day.